Hey guys, David Robinson here. Welcome to the apartment investing journey. We've got another great guest for you today. I'm excited to have Stephen Louie with us today. Stephen, welcome to the show. Appreciate you coming on.
Yeah, no, thank you so much,
So,
David. Been a pleasure to be here. So,
yes, thank you very much for coming on. Stephen is managing partner at Vertical Street Ventures. He's responsible for acquisitions, sourcing capital, and building strategic partnerships. As the founder of Vertical Street Ventures, he focuses his time on revenue generating activities for the firm through multifamily real estate acquisitions. He's also retired from corporate America to focus on his apartment investing business. And Stephen, as always, our podcast is all about the journey, and so we would love for you to back up and tell us a little bit about your background, your backstory, and how you got started in the real estate space.
thanks, David. Happy to tell you a little bit about my backstory. So, just like most individuals, I graduated from college. Got a really good corporate job out of college. I ended up being a group underwriter for a health plan. And what a group underwriter was, we developed rates for that we charge employer groups. And it was really a desk job. And I found that I really can't sit still too well. And so I seeked out kind of different opportunities. And one of them was a business development opportunity or sales position at a large Fortune 100 organization, MetLife. And that was a game changing moment in my life, I would say, in terms of moving me from an introverted individual to a much more extroverted individual. So you have different points in your career that do come up. And that was one that transitioned from a financial technical individual over to a salesperson was extremely beneficial for me. I was fortunate enough to have some awesome mentors, leaders that guided me through the sales processes and end up being one of the top sales reps there from an institutional perspective at MetLife. And then what do they do with great salespeople? They move them into leadership, or they move some of them into leadership. And I took that route. So you kind of have a path or fork in the road. Do you stay as an individual contributor, or do you move over and go into leadership? And I chose the leadership path, which really helped develop a lot of my skills in terms of mentoring and coaching, all the things that people spent the time to help me grow within my corporate America path. Did so. I spent about half my career in sales, the other half in leadership. Most recently, I worked for a consulting firm. That consulting firm, I basically climbed up the ladder within that and became the office leader or growth team leader of all of Southern California, which included LA, Irvine, San Diego, and Las Vegas. And that gave me the opportunity to lead our multiple disciplines of health, wealth, and the people side of the business. So I call my career path from cubicle to corner office and learned a lot on that. And that enabled us to, Jenny, my partner, business partner, to both of us to kind of grow the business that we can talk about in a little bit. Was really fortunate enough to be able to get introduced to real estate about halfway through my career. And so I started in single family. Actually, my CPA and financial planner at the time mentioned that there are some great opportunities from a tax perspective to invest. If you invest in real estate, there potentially could be some tax advantages that you could take advantage of. And so that intrigued me. And I started in single family homes. Those single family homes, I invested in 10 plus. I wanted to get to 20. And then somebody introduced me into multifamily. And that multifamily journey has been an excellent upward path where on a single family home, as most of us know, you can, it's all based on the comps in the local area versus multifamily. Really, it's the ability to create, or what I call force appreciation, which really is the upside on multifamily, which I really love about the business.
Well, I love that. I appreciate you giving us some, some insight into your background in the corporate world and how you sort of grew up in that space and moved up from, where you were and taking on more leadership roles and management and eventually coming to the point where you decided or at least you were exposed to the concept that there were some tax benefits for what I would assume was high income earning W-2 employees in a corporate career. If you were to move some of that capital into real estate, you might be able to take advantage of some of the many tax benefits. And so you did that, and you bought single family. You started out in single family, which is very, very common, right? What was it that caused you to move into multifamily? And just to give us some context, when did you buy your first single family home? And then when did you move into multifamily? So two questions there.
Yep.
When did you buy your first single family home? And when did you move into multifamily? And then why did you move into multifamily?
A great question. So moving into single family homes, I moved, my first single family home was back in 2012. And so moved into 2012, moved into single family homes. And for me, it was invest. I live in Southern California. And so I invested in more landlord friendly states than California. And so I've invested all my single family homes were outside of California. And so a couple of things I always looked for, they call it the 1% rule, where you have your rent is about 1% of the purchase price. And so that was kind of the general rule of thumb at that point in time that enabled me to build a portfolio of close to 10 10 to 12 different single family homes. And then as I continued to grow, as I found for single family homes, you'll have 10 insurance policies, potentially 10 property managers, 10 mortgages. And it just became very daunting to kind of manage that entire process. And then a friend introduced me to a meetup. And so you never know who you could meet at a meetup. And so I went to the meetup and met an individual that I partnered with on a couple different other opportunities. And he introduced me to multifamily and said, you should actually go out to an event in Dallas. And it was a event where somebody was selling an opportunity to understand multifamily in a greater detail. So a couple of weeks later, I took a flight out by myself and heard the seminar, and I kind of was all in when I found out the ability to kind of build a business around multifamily. And instead of having all these singles, you have, call it 100 unit. And that 100 unit, you have one insurance policy, one property manager. And if you were only at 90% vacant or 75% vacant, you still had income coming in to help support and pay all of the expenses. As opposed to the single family, if for some reason somebody decides they don't want to pay their rent, you kind of could be stuck for quite some time, a year or two, just depending on the state that you're actually invested in. And so that was kind of my transition there. And then once I understood the concept, I spent probably about a year just underwriting deals and underwriting in the Texas marketplace, one after another, and really didn't have any success in closing any deals, quite a few LOIs, a lot of underwriting. And I attribute some of that to probably some of the distance of where Texas was to where I was living, and then partnering with maybe all brand new sponsors or syndicators out there as well. And so if I had a kind of tip, it would be to ensure that maybe you follow the success of others. You know, as Tony Robbins always says, success leaves clues. And so maybe follow the clues of those who've done it in the past. The great thing about though investing in Texas, I became a key principal on quite a few 3 different deals where just allowed me to sign on the loan and get that experience. And that really was kind of the turning point on multifamily. Getting that experience allows you to get agency loans and kind of your gold card with the agency, so to speak. And once our platinum card, or however you want to say it, and then once you get those, the sky is kind of the limit. And at that point, I kind of transitioned all of what I had learned over that year into the Arizona marketplace. And that was right around 2017 to 2018. And at that point, that was kind of where kind of focused on a particular market. And then with focus, that leads to potential success. And that's where we're able to kind of grow that.
Love that. So, you transitioned into multifamily, and then you decided to focus on the Arizona market. Was there anything? I mean, did you just look at multiple markets, liked the numbers that Phoenix had to offer, and decided to say, "Hey, I'm going to put my flag in the ground here and stay focused." What was it about the Phoenix market that attracted you?
Yeah. So one of the great things, anytime you're investing in anywhere, whether it's single family or multifamily, all of the positive markets or the great markets that are in multifamily, they're the same markets for single family. And so it's just the key thing is being educated around which markets make the most sense. I'd mentioned earlier, I do prefer landlord friendly states. And so Phoenix is one of them. And the great thing about, I should say Arizona, the great thing about Arizona is Arizona, there's really no perils. When I say perils, no hurricanes, no tornadoes, no earthquakes. There's a lot of sun, but in terms of that, what that does is the insurance costs are a lot less. And so there's just a favorable market in terms of being a landlord in, just like Texas is fairly favorable as well. The taxes obviously are a little bit higher, and they do have some type of climate changes that are a little bit more drastic than probably Phoenix. Why I like Phoenix and Tucson, I should say Arizona, is because it was close by. I could drive there in less
Mm.
than 5 hours or less than 4 hours sometimes to get there, or a plane flight away. So pretty local to the area and understood the market. It kind of performs like a coastal market in terms of some of the appreciation as well.
I love it. And so maybe let's fast forward and let's talk about what your business looks like today. Yeah, just give us a brief overview of what Vertical Street Ventures looks like, who's involved, what you guys focus on, all that.
Yeah, absolutely. So, Vertical Street Ventures. The great thing about us is what we started. Well, let me just take it back a little bit. So, as in 2020, I was able to leave my corporate job because of all the passive income streams that I had built through investing passively in multifamily, and that those passive investments helped me learn to be a general partner as well. So being a general partner is kind of your I call it the pilot of the airplane, so to speak, and you're leading everybody through that path. And that allowed myself to kind of transition very easily after doing quite a few different passive opportunities, LPs, into the general partnership within the Arizona marketplace. And I was fortunate enough to meet somebody at a meetup as well. That was Ronnie Gu, which is Jenny's husband. And so we kind of connected, and he said, "Hey, my wife is actually left her corporate job and is looking for some opportunities to kind of grow our portfolio, our real estate portfolio, their real estate portfolio, I should say." And they had a similar background to me. They had a similar portfolio of 10 single family homes. And then I was able to connect with Jenny Gu, who's the other co-founder of Vertical Street Ventures. The two of us had very complementary skill sets. She came from an extremely strong sales and sales strategy background from Procter and Gamble, one of the largest marketing firms in the world. And between the two of us and our abilities, we were able to launch Vertical Street Ventures beginning of 2021. By the end of 2021, we probably had close to 90 million of new assets under management, about 7 different acquisitions within the Phoenix and Tucson marketplace. A lot of that is attributed to the focus that I had mentioned earlier. So you can really focus on one thing, and that's apartment investing, which we have doubled down on. And building those relationships in the marketplace has been substantial for both of us. And then what we've done, we've used our corporate experience. So and isolated and built roles for every single individual that was out there. So for me, I'm really focused on the acquisition, the sourcing of capital. Jenny is awesome in operations and asset management. And then Ronnie just left his corporate job or retired from corporate America as well after about 15 years of corporate at Procter and Gamble as well. and then he focuses a lot on our investor relations and marketing. And then we have multiple different things like asset managers there. And so really applying all the corporate America skill sets that we've learned and applying them to the overall running a business within apartments and multifamily. I know I said a lot there, but
That
that's kind
is
of the foundation
wonderful.
where I can't thank corporate America enough for giving me all of the opportunities and the skill set to be able to launch the the business that we have now. And so that business layers from not only acquiring, managing the asset, but we also have an academy. And so that academy teaches individuals like you and me that really want to learn how to invest within a very invest within Arizona specifically. And so we have an academy that's specifically focused in how to get into the Arizona marketplace, and have a lot of success with a lot of our students in sourcing deals for them because of the relationships that we built.
Hmm, that's very interesting. I actually haven't heard of an academy or, a structured program that's specific to a particular market. So I would love to learn a little bit more about that. But before we dive into that, um, it seems, based upon your description, that you guys really took off once a formal partnership was sort of put in place. You acquired roughly $90 million of multifamily in 2021, and that was about the same time that you, A, left your corporate career, and B, found a partner, a business partner. Maybe talk to the listener who's in that phase, who maybe has a deal or two through joint venture or has done some real estate investing in the past and is really looking to build something substantial. What was that process like for you for finding the partner and sort of formalizing a relationship? And what kind of impact did that have on your trajectory over 2021?
Yeah. So the first thing I would have to go back to is the great thing about the ecosystem of multifamily or apartment investing. There are so many meetups that you can go to, and you never know what meetup you will potentially attend that you will meet your future partner or business partner at. And just because you do have to kind of hone it down and focus into that because there's so many different meetups that are out there. I happen to be able to find Ronnie, who introduced me to his wife, Jenny. And that allowed us to really spend about a year, really during COVID, a year of just kind of getting to know each other, understand each other's strengths and weaknesses. Being corporate folks, we were very focused on, hey, where do we need to go from the next standpoint? Initially, it wasn't about, okay, let me build the business. Let's just see how we can work together. She was working on since I was a pretty busy corporate business professional, she had some time and she was able to dig deeper on a lot of my property. So it was taking care of the asset management, taking care of some of the weekly calls. And by
Mm,
doing that, we've both built trust with each other. And then towards the end of the year, 2020, kind of looked ourselves in the mirror and or looked at each other eyeball to eyeball and said, hey, what's going to be best for us as if we want to make this and kind of scale upwards. The great thing the great thing about multifamily, it's very much a team sport. Really hard to do it on your own versus single family. I think most people can do it. They call it single. I always say they call it single for a reason. You can do it by yourself. Multi, you need multiple different people to kind of
mm,
help you from to kind of grow that business. And so that was really the launch pad. I did have as I was going through my corporate career, I did read Rich Dad Poor Dad, really changed my mindset. It was probably about midway through my career as well, about how what I needed to kind of do, just the concept about it. I didn't understand exactly how to get from the left side of the quadrant being a W-2 agent or over to the right side of the quadrant of being an investor and a business owner. Really, it was hard for me to understand even today, like the tax advantages that entrepreneurs actually receive are unbelievable. And so just uncovering and unwinding some of those things have been awesome as well. And so
and maybe I'll dive in real quick to Jenny and her role. It seems from the description that you've provided that this is a good template for someone who's wanting to sort of break into the space. Obviously, you met Ronnie, and Ronnie introduced you to Jenny. Jenny, it seems, and correct me if I'm wrong, but it seems like she had maybe left her corporate career or just had more time available to devote to some of maybe the underwriting and the asset management that you didn't necessarily have time for, yet you had the ability to source deals and opportunities. And so you were able to bring a piece of what you could focus on to a potential relationship or a potential partnership. And Jenny was able to use her time and her background to help you with aspects that you didn't or that you didn't have the time for. And so it seems like it was just sort of a natural progression, but a great way for her to sort of get into the space too, maybe working with someone that had already figured out a way to source deals. And that's one of the biggest challenges that we face in the market today. And anyways, maybe just speak to that. Is that an accurate representation or description of how that relationship broke down?
Yeah, absolutely. A lot of times when you're out there, you kind of tend to connect with people that are maybe similar to you. And so if you had two people that are both sales focused and how do I say sales focused and only and not looking at the bottom line and some of the asset management pieces, that could be an extremely challenging relationship down the road. And so, like I'd mentioned, you truly want to have a complementary skill sets. And then, the great thing about it, both Jenny and I are actually very technical and also have that sales ability. So I could actually she could do all the things that I do, probably 10 times better. And then I could also do the things that she does. So what that does, it enables us to kind of fill in for each other if need be. Initially, we were kind of doing things together. Now she's really focused on managing all the property assets that we have. We have 13 properties in the Phoenix and Tucson area. She does all the asset management with the hired asset manager that we recently hired there. Then I'm focused on sourcing capital, working closely with Ronnie on the investor relations piece, and then really building relationships in the marketplace, specifically acquisitions. We also brought in another partner just at the beginning of this year, Kyle Mitchell. Might have heard of him. So Kyle now is part of Vertical Street Ventures as well. He's our boots on the ground in Arizona too. So he's there really much more focused on the acquisition piece. And so I'm helping to support those two angles across the board there too. So really, awesome. You just got to think about growing it. For those listeners out there that want to do it's all possible. You really just have to take the steps, meet the right partners, and then apply processes in place. And we have been very blessed and fortunate that we had corporate America and a lot of different, like people complain about corporate America, but I think about all the positives. It taught me all the structure. You have to goal set in corporate America every single year. Before at the beginning of my career, I'm like, why am I doing this? It's like, okay, I guess so. But now we actually do it for a purpose. Purpose is, okay, we need to be at $200 million of assets under management of new business. And then what we do is we back into that and say, how do we get to those goals? And we apply different roles and responsibilities of what we needed to get there, bringing in that corporate feel, but not having all of the red tape you have to jump through and kind of cutting through all of that very quickly because we saw what we didn't like. And so we didn't want to leave our corporate jobs for another corporate job. Hence, we brought in multiple different individuals to help us get to that next stage as well.
I've kept you, quite a while now, and I want to start winding down our conversation a bit, but I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
So challenges was not setting up a couple particular processes that we probably should have done from day one. So the first thing I would say is get a bookkeeping system like a QuickBooks, or you can use AppFolio, or you can use Yardi. That is probably crucial. I think I waited until month 11 of last year to go through all of the different expenses. And we kind of put that on the side as we were growing the business. But that spent more than a month of trying to reconcile all of that. So I'd say ensure that you have something like that in place. And then also with that, also start with your CRM from the day one, whether it's ActiveCampaign, HubSpot, whatever you decide to use, use something right from the beginning, because I think at the beginning we had a bunch of cards that were sitting all over the place and writing our name.
Mm-hmm.
Now automatically kind of put all of those things in. And I would have probably also hired a virtual assistant much earlier in that process to kind of help out on those two particular items there,
Mm-hmm.
David.
Great advice. What's something that you're doing really well in your business right now, just absolutely knocking out of the park that we could all learn from?
One of the key things that I always say, everybody can underwrite deals, and I can actually learn that process. One of the key things that I really stress on individuals is building relationships. And those relationships are with brokers, lenders, um, everything from insurance to lending across the board. And if you build those personal relationships with individuals and they know, like, and trust you, they will do business with you. A lot of times I see a lot of folks just go in and think they're going to get the deal because they have the numbers. But reality, just like we know in corporate America, as people get promoted, it's not necessarily all of the detail that gets you there. It's how well you built that relationship with the individual. And so, one of the key things is building that relationship with the brokers. You have to treat them with respect. When they give you a deal, and if you can't come through with it, you call them back and say, hey, unfortunately, this is not the opportunity for me. Those are probably the key things that I stress on our team that we need to do immediately, because they're waiting for your response so they can go on to the next person. And don't hold them up if it's something that's not going to fit in your portfolio or if it's too big. And then secondly, when you say you're going to do something, do it. So close. If you're going to close on that opportunity, you better close on that opportunity with that broker. And so relationships is probably the key thing that I would stress.
That's great. Well, look, Stephen, I've really enjoyed our conversation. I appreciate you sort of sharing some of your background and your backstory about being in corporate America, the things that you've learned in the positions and roles that you played with those companies, and how you transitioned from single family into multifamily, ultimately met your business partner, and how together you guys have grown a team and acquired $90 million in real estate in the last roughly 12 months. What's the best way for our listeners to connect with you and learn more about what you have going on in the future?
You can always go to our website, verticalstreetventures.com, and you can set a meeting up with any of us directly. You can also connect with me directly at Stephen@verticalstreetventures.com. Happy to connect anytime if you had any questions.
Awesome. And we'll have a link to that in the show notes. So if you want to connect with Stephen and his team, go down to the show notes right now, click on one of those links. Again, Stephen, thank you for your time today. Thanks for sharing your journey with us, and I look forward to connecting with you again soon.
Thank you, David.